Well, there remains a world where no matter if your money is kept under the mattress or is heavily invested in the stock market, you must still rise every morning and wonder if that paper is going to be worth the number on it. When we come to such crossroads, we deal with the hot issues. Welcome back from the Society to Advance Financial Education. For this edition of Bulls, Bears, and Bucks, I'll get it out sooner or later, and we'll be moving on. Steve Beaman joins us. How you doing, Steve?
I'm very well, Ed. Thanks for the introduction.
I am absolutely stunned that the mouth won't even work today, because all of a sudden we're coming back to work here after a holiday, and we're hit right away with Apple, Greece, Venezuela. Okay, start here. Greece. 10 days until the Athens credit line expires. Okay, I'm sitting there. I'm the American investor. You're the guy. Why should this concern me?
Well, this is huge. What you've got is the European Union has loaned about €500 billion to Greece. They're running a budget deficit that's about 10 times their economy, and they aren't willing to make the steps or the strides to take that deficit down. So the European Union, led by Germany and France, are saying, we're not going to loan you any more money here. They may just let them go bust, which could spell problems for the EU as a whole. So this could be a major strategy effect for investors around the world.
But is it possible that the EU is aware of this? Obviously, they know what's coming, and that there's any sort of checks and balances here that may keep, if Greece is indeed allowed to go down, to keep it from having that domino effect across the EU and then maybe even across the Atlantic?
Well, clearly that's what they did before when they stepped up and said, okay, you're too big to fail. We're going to give you the money you need. But this new regime that's taken over in Greece, the Syriza party, has come out flat out and said, you shouldn't have loaned us money before. We need to straighten our own economy out with socialist measures, and they're going to try to do it. So I'm a little concerned this time around they may not be able to go back to the well.
In your opinion, who breaks first, Greece or the European Union?
If there's any brain involved, it's going to be Greece.
If there's brain involved, please, Steve, I know we talk about financial education here. We also have to talk a little bit about common sense here. We know sometimes that the people who are running these countries, specifically even in Greece, the brain is a secondary item. So
Isn't that the truth?
Let's always keep that here. Let's go to Venezuela now. The currency there, it is bleeding, but it's not only just what's happening in Venezuela. Fair to say that it's what's happening here to American companies, because this does have a direct effect on what happens here in the States, right?
Boy, you go from one bad case to another. Venezuela is a complete socialist basket case. They're running 68% interest rate or inflation rates right now. You've got Pepsi, Kimberly-Clark, Clorox, major companies, Ford Motor, all looking to completely write off their investments in Venezuela, and we're looking at billions of dollars. This is not insignificant, and I think when you look at the result of this, it's going to take percentages off of these companies' shares.
All right, so when they do write it off, and you just talked about the share issue here, but when they write off all of these losses here and basically divorce themselves from Venezuela at this time, will the American consumer feel any of the effects on goods, services, and growth of the economy?
I don't think the consumer will. This isn't going to hit the American economy so much as it will the investors. And that's a pure market issue. But the market's being sustained by the Fed that keeps giving us free money. So I don't think you're going to see a huge ramification of it here in the United States.
So you take what's happening in Venezuela specifically, and then in Greece, and then the Fed perhaps raising interest rates later on this year. This really seems like a recipe for disaster.
Well, Venezuela is the small player in that group. I'm very concerned about Greece because of the European Union and this Ukrainian situation that just doesn't seem to go away. And then, of course, the Fed. Now, they're looking at retail sales that came in very poorly in January. In fact, the lowest growth, I think, since 2008. So they may be rethinking that, but we'll have to see what they do.
All right, we got about a minute left here. And, of course, it's Apple's world, and we just happen to live in it. We once again have evidence of that because they have now ordered 5 to 6 million watches from their Asian suppliers. This is the new Apple Watch, expected to be launched in April, which means there'll be something else that people will be watching in their cars while they're doing 90 miles an hour.
You betcha. 5 to 6 million units of these things, and I think they start at $350. Well, that was well received by the markets. Apple shares jumped about 2% on that news today, up to $129 a share. So you've got some real strength at Apple. They continue their development. But the interesting story here, I think, isn't as much the watch. It's the technology inside the watch, from the semiconductor-based ubiquitous computing that's coming our way. We're going to start seeing more and more wearable technology in the next 5 years, and that's going to be explosively growth-oriented for the semiconductor sector.
Is there a feeling that, I mean, Apple is doing this and they are in front of the curve right now, but that they are way in front of the curve right now, that they'll be able to hold this market position for a long period of time before others come along and try to steal some of it?
Well, there's so much cachet to Apple. I mean, you look at their stores, they've got upgrades going on, but even the current stores are so state of the art compared to other vendor competitors. Apple could hold on to this leadership position for quite some time. Tim Cook, the new CEO, seems to be continuing in Steve Jobs' footsteps very well.
It's a toy store, and every time you walk by it, you have to realize that your wallet or your purse starts to throb. It is a bad idea indeed sometimes. Steve, always a pleasure, my friend. Thanks so much for joining us. We will talk to you later this week.
Thank you, Ed.
All right, buddy, be good. There's another slippery slope we're being warned about by those in a position to make or break laws. That's coming up next, right here on MidPoint.